welcome to Market Talk from Innovative Ag Services for Wednesday, July 16th. Today, Beef Production Specialist David Rueber is diving into the record-setting highs we've seen across live cattle markets, both futures and cash. He'll break down what's driving these moves and what they mean for your bottom line. Now here's David Rueber.
Once again, new highs, new contract highs on the board. We got August futures up there, pushing into the mid-220s, which is $15 below last week's prices. We sold cattle in the high 230s to up to 240 last week, back up there pushing our all-time cash highs that we had seen here about, 3-4 weeks ago. We thought it would be higher last week, but it just kept going higher and higher. Packers didn't have enough inventory bought, kept chasing her. Later we got into the week and ended up being in that 240 range at the end of last week for cash cattle. It's weird. We had Packers were kind of back on the plus side again, and then cutouts have tanked in the last 2 weeks. They're down $3-4 again today. So boxes have dropped off $15-20, and cash has put close to $10 back onto this thing. Packer margins back on the hard side. Now, boxes dropping this time of year is very seasonal. That's what it usually does in July. So that's not a big shocker. The shocker is the fact that we've got enough leverage on the fat cattle market to forge these prices higher. This week feels like kind of a flat week. Really no trade yet, or a little bit of trade, kind of at steady money, but kind of feeling like we're going to be somewhere up there pushing that 240 range again. It's hard when boxes are crashing like they are. It is hard to, if you were in the packing side of things, to pay more money out in the country, but they got to have inventory, and there just isn't inventory. Speaking of not having inventory, go try to buy some feeder cattle right now. That market is on fire as well. Probably actually a higher trajectory than what live cattle have been this last 2 weeks. I would say most of these yearling feeders we've put $10 to $15 on in the last week. A good 850-pound steer would run you $325 to $330. With reports of cattle higher priced than that. 7 weights, $350, 6 weights, pushing $4. This feeder market is just on fire. They're hard to find. There's high demand and not much supply to choose from. If you had to go out and buy 500 head of feeder cattle today, it would be a damn near impossible task to try to get that done, uniform, same weight kind of cattle. So, yeah, and this time of year always is a tight supply of feeder cattle, but, it just seems even harder than normal this year to get pens filled back up again. Break-evens on these new cattle we're buying back, 225, some pushing not far from 230. That's definitely a scary number. Cost of gains, 90 to 95 for these steers, $1 cost of gain for heifers. The hard thing on that is, some of these cattle you're going to put a lot of pounds on when you're going to move them into wintertime, and then we're going to want to make them big. Some of those cost of gains could get a bad surprise when January, February rolls around if you're feeding 1,600 pound cattle and it's 20 below zero. That furnace needs a lot of fuel. Critters that big that time of year. So those cost of gains, there's a little bit of iffy factor going in there depending on, what happens with this weather in the wintertime. Fun time, volatile time, good markets, good profits. Obviously you just kind of keep selling into it and enjoy the good times while we got them. Thank you.
David, thank you. Certainly some uncharted territory we're in right now. That does it for this week's edition of Market Talk. For more information, be sure to go to our website, innovativeag.com, and follow us on Facebook, Instagram, and LinkedIn. I'm Nick Weig with Innovative Ag Services.